Star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
What's up, guys? Andrew with another Options Millionaire educational video. One of the first questions people ask me when they come to the Discord or they're talking to me and they want to learn how to trade is, how do you prepare? Like, how do you figure out what's going to happen for the day? Like, how do you figure out what's going to happen for the week on Sunday afternoon? Like, when I'm sitting at my computer Sunday afternoon, Monday morning, and I'm really kind of developing my strategy, is what do I do? How do I figure out what's going on? How do I know what's going to happen with the market? And the honest answer is, no one knows what's going to happen with the market. I don't know what's going to happen with the market. But what I do is I use trend analysis to figure out probability based on historics, based on the price action, what could possibly happen. And I develop the highest probability range, highest probability scenario that the price is going to manipulate in throughout the week. And I develop my strategy around that because no one knows what's going to happen except maybe the market makers and hedge fund managers, but they're the one makers in the market. We're never going to beat them. So what's the tool that we have? The one tool that we have to defeat the hedge funds and the market makers, and that is volume. Volume. We have to use the volume to develop trend analysis. I think one of the misconceptions that day traders do is that they don't need to worry about trend. They don't need to zoom out past the single day 15-minute chart, 3-minute chart, because they're doing day trading. Why do they need to know about the trend? When it's absolutely incorrect. If you as a day trader can learn to trade with the trend, you're going to be 90% above all the other traders combined because you have the foresight to zoom out and see the big picture. In order to see the big picture, you have to zoom out beyond the one-day chart. I go to the 1-year chart. I think the 1-year chart, personally, is the most important chart that you can look at. If you could spend an hour or two a week at least just absorbing the 1-year chart, looking at trend data, look at the price action, look at the volume. If you can zoom out to the 1-year chart and spend a few hours a week on the 1-year chart just looking at the volume and the trend data and the price action, you will be a far superior trader than you used to be. Why will you be a better trader? Because you will learn by going to the 1-year chart how to identify key points in the market. Pivot points, rejections, supports, resistances, cyclical periods in which the market pullbacks every certain amount of time, certain period. All the different data points that will teach you how to identify trends in the market. Identifying trends will make you a better trader. Everybody thinks this just because they're a day trader that they stay on the 1-day chart. I'm a day trader. Why do I need to care about the weekly or 1-year chart? All I got to do is trade today. That's not true at all. In fact, it couldn't be further from the truth because as day traders, if you could learn to trade with the trend, you will be grossly superior to all of the traders just by that tenet alone. The biggest barrier for any day trader is your ego, your emotions. So when you're not looking long term, you're only looking at the single day and you get a bias in your mind, you're not going to be able to trade against that bias because you're just human nature. You're going to fight your bias all day long. SPY can't possibly climb any higher, I'm taking puts. SPY can't possibly fall anymore, I'm taking calls. Every single bull run comes with drawbacks. Every single bear run comes with pops. It happens. It's just normal price action. You can't have buy every single day. It's just you're going to exhaust the buyers. Sellers are going to step in to refresh the price, and the buyers are going to continue to buy back up. That's what it is. And you see at the price, that's why SPY doesn't trade in a straight line, green candles every day. You have these little oscillations in the market, sell-offs. And the point is if you can identify those trends when you have a price fluctuation, you can start identifying when to enter certain positions just based on the trend data alone. And then after you develop that trend data, then you can start to customize it to that particular day. Anyway, I'll get off my soapbox and really kind of start getting into how I develop my trend data, how I figure out what's going on, and basically my view of the SPY chart. So here you're on the 1-year SPY chart. You'll see my indicators here. All I've got is the volume at price, nodes, the POC. I've got this traditional volume candles down here. I've got the squeeze momentum, and I've got the 8, 21, 34 EMAs, and then the 50 simple moving averages. These are EMAs. The red is the 50 simple moving average. That's the difference. And of course, I've got the green line, which is VWAP, which is only for daily charts. You don't use that for long-term trading. I also have these session ranges here, but I don't have those on for this trade because those are only daily things, so I turn those off. So the 1-year chart, I'm looking for trend data. One of the first things I'm looking for is volume candles. You see these volume candles, we kind of have these like bowls forming where price spikes, price dips, and how does that correlate to the absolute price action? So I just want to, this is a great example of cyclicals. Since May, we've had some really clean cyclicals. And what that means is this little oscillations of price where they just come up, level out, come down, come up, level out, come down. And then you look at the price action, just kind of inverses that. You have these little peaks, you have these bowls, because let's take this for example. You've got this right here. The price started leveling out. We started getting wicked out June 15th, and then the price dumps. You see this vast gross increase in selling right here, and then this big dip in price action because you have the supported selling. It drops it below the 50 MA. You come down here, you immediately get bots up because it drops to this 50 MA, and then the selling just dries up. And now you get the buyer step in. You got this nice rebounded green candle, and this thing comes back up. And you see the green candle pop up, the buying, big green candles here, comes up, and now you see this kind of price action start to level out here. This little dip here, you have these big spike in buying, and it continues to bring it up and up and up. And then price candle drops off. This thing gets wicked out. You've got this gravestone doji forming here. The seller volume picks up here, and now you start to see this dip again. Bam, just sells off. Selling volume comes in, selling volume spikes, and it comes down. Now watch, it bounces on June 18th. It starts to dip on July 14th and then bottoms out on July 19th, almost perfectly to the day, 30 days. Now you can kind of see that's a 1 month cyclical where price spikes, it dips, then the selling volume picks up again and dumps it. And if you can identify that, because I found that about every 30 days, roughly, sometimes it's 3 weeks, sometimes it's 5 weeks, but roughly in that 3 to 5 week range, you could start identifying, hey, SPY is going to dip here. And that's in a normal bullish market that we've had. So even here, we see this price tanks on May 19th. The buying volume picks up again, buys it up. It starts increasing. You have these little candles getting bought up here. The selling volume and buying volume are kind of maintaining. We're trending sideways, and over here, and then the selling volume just picks up. Red candle, bigger red candle, and the price just dumps right below the 50. And then the buying volume picks it up again, and the price continues on up here, right above the 80 MA, bounces from the 50 back above the 8, and starts climbing back up here. Buying volume picks up again, and then dumps it again. This one on May 19th, it comes out, levels out, and dumps it on June 18th. So almost again, a month to the day. Now in these two examples here, it happens almost 30 days apart, exactly, which is not necessarily happening all the time. That's just a little too predictable if it were to happen every 30 days. But this is just an example to teach you to read trend data. Now, I incorporate everything. I incorporate my price volume. I incorporate the candle analysis. I incorporate the EMAs at the last resort once I'm done everything else. And I incorporate my volume and price nodes to determine exactly kind of how everything is going to change and manipulate and read the price action. But you can definitely tell there is going to be a cyclical of this data. I mean, you can just look at it and say, all right, there's going to be an oscillation, a normal price oscillation. And you have to figure out when that's going to do that. And it's not as simple as counting, all right, it's been 30 days, it's going to dump. You have to be a little more analytical than that. And what I do is I start reading the candles. You can kind of see here, this little period lasted about a month and 2 weeks, about a month and a half. So it popped up on March 25th. It raged, it went crazy, it went sideways. And then I start to see, all right, you see all these candles are getting wicked out. That means the buyers are coming in and they're buying these up and the sellers are fighting them along the way. And no candle really wants to hold. You don't have this nice, big, healthy bodied candle. You have all these wicks, which are indicating weakness in the market, a possible top of the market. Now, in this particular instance, it's bought up. You got this dragonfly doji which says, hey, the buyers bought this candle up, it wicked this candle up to the top, and then buying volume bring this back in. But then you get this big old healthy body candle pop down, increasing selling volume, and just took this thing all the way back down. And this happens anyway, and then March 25th, and it bottomed out on May 12th. So about a month and a half on this one. So a real life analysis, how does that apply to my trading strategy? So let's zoom in here. You've got the 1 year chart here, SPY, of course. Back on July 19th, 2021, we have this dip to the 50 MA, and we bounce off, reject, come back up, and then we have this another dip down to the 21. We bounce off that, and here we are in the third candle after the bounce off the 21. Volume here, which is the biggest tenet, we have this initial big buy-up candle here, and volume starts to dip off, lower. We have Friday's dip, or Friday's buy-up, with this candle here, which is slightly higher, but still lower than all this other candle average. So we still have this downward trend in volume. The squeeze momentum is still firing on the upside here, but if we look at historicals, what happens off here? So we have this similar situation here. A rejection off the 50, come up, dip down to the 21, buy up. Now we have these candles here that just trend on the 8 EMA on the way up here. Just wick out, little bitty candle, still a decreasing volume. So a similar situation here. As volume diminishes, the buying volume diminishes, we have the candles just trading the 8 EMA come all the way up. So let's look. So right now the price is at 442.49. Pre-market's 441.63. this candle, if it stays true to the 8 EMA, I would say somewhere in the 440.60-ish range will be the bottom of today's candle, and maybe above if we pop a little bit above the 443.48. So we have that little $3 range in which SPY could trade today right now, and I'm watching the volume here, but I anticipate sometime in the next week we're going to at least start the downtrend to the bottom side based on the volume is diminishing off. We have that rejection off the 21 after the rejection off the 50. You can kind of see this thing falls out and it flattens out and falls off. And with the volume dying off, I can anticipate somewhere in the same vicinity of this next week, we're going to start that little flat line taper, and then we'll eventually have a dip back down to the 21, which at that point will be somewhere here, which will be somewhere in the 433 range in terms of the 50 MA a couple of days from now, somewhere in that range. But that is how I formulate my strategy. I can know sometime this week, because today, this is Monday, sometime this week, I can at least anticipate the flatlining and then beginning of the rejection of and come back down to the 50 MA. Now, this is all notwithstanding of any news events. So, of course, you can't plan for any news, but this is a real life analysis of this chart and how I look at that going forth. Volume is diminishing. We're going to ride the 8 EMA as we come up here. We've already had the rejection off the 21, that day's form. We are firing on the squeeze momentum, but we just have this little flip-flop back and forth between dark and green candles. So right now, I don't have this big trend where it's all green. It's flip-flopping. So the volume is coming in and out of this market, whether we top out. And the way this thing looks here, I think we're going to have that little dip back down this week, and we'll see how that plays out. Anyway, guys, that's really all I have. It's just developing trends, learning how to read trends, price action, EMAs, volume price analysis, using those levels to really focus on the trend from the overall data. Notice this entire video, I didn't even go to the 1 day. I went to the yearly chart because that's what I want to show you. Spend more time on the 1 year chart, developing trends. Just sit there and look at it and just look at how the chart follows. Look at how the price action manipulates. Learn how to do that and apply that trend data to your day trading analysis or your weekly analysis to figure out what's exactly going on. I promise you, you will be a better trader just by focusing on the trends just on that alone. Thanks for watching. If you're new to the channel, please like and subscribe to the video so you get notifications not only for videos like this, but for live trading as well. Go over and join the Discord. Amazing wealth of resources there. You can learn anything from day trading to theta trading and everything in between, long-term investments, real estates, everything in between. It's a one-stop shop for all things educational investing related. You can also email me optionsmillionaire2020@gmail.com. And just be sure to hit that notifications bell right below on this video and make sure you get those notifications. Anyway, thanks for watching, for taking the time out of your day to watch this video and supporting the channel. Until next time, I'm out of here, peeps. See ya.